So when you put together your email template funnels, they should lead them on a journey. Watch this next one here. Do the math. That's my subject line in the email template. Next, it's important to determine your net worth, both what you owe and what you own. Your assets include your home value, savings account balances, checking accounts, 401k, and outside savings. See, what happens is after I catch your attention, then you read the email. What I haven't put in there, we don't have time for that today. You can jump in the Advisors Max class and see the call to actions, but you got to have a great call to action in there. And the tax seasons give you a great opportunity to have a lot of call to actions. See what I did there? This includes your mortgage and other consumer debts. Tracking these numbers every January gives you a good picture of your progress. Click here and I'll give you a free form to track that. So you can have a great call to action in there. Rebalance your portfolio. 2021 was a crazy year in many ways. To make sure you're still on target for your goals, take a deep dive into your portfolio. Click here and I'll schedule a free 15 minutes. See how that works? Stocks overappreciated significantly in 2021. So now is likely a good time to rebalance your portfolio. Maybe the heading on this one is rebalance. And how many different tax seasons have we talked about are coming up? And look at all the messaging there. Your head should be spinning with all these messages. So here's how I would frame this one. For example, if your target asset allocation is 60% stocks and 40% bonds, and you have not rebalanced recently, your allocation may have drifted to a more aggressive allocation of 70% stocks and 30% bonds. You ready? Here's the hook. Here's the click. Is that what you were expecting? Is that what you want to have happen? Click here to get your answers. Schedule a time. That's how we do that. We do the for example and then a great call to action. Show me the free money. Did you know the 401k, you can read it faster than I can, raised in 2022 per individual? The did you know is a great way to start off an email. In other words, what we want to do is we want to talk with our prospects, not at our prospects. Those 50 or older, wait a minute, 50 or older, what is that again? Oh, that's a target market and that's a lead type. Whenever you see things like those 50 and older, that's a target market and it's a lead type. If you have a good lead source, then you go to that lead source and you say, I need this type of lead. That's a total of $27,000 for each half a couple. Do you like the way that's worded? I like the way that's worded. I'm going to pat myself on the back here. I like the way that's worded. Half a couple. So I take a husband and wife and in their mind, mentally, emotionally, I divide them in half because one of them, I can promise you, if my wife and I saw the same thing, she would have a little bit different take on something than I would have on it. Half a couple. I wonder if that's a marketing message. Even if you don't put in the maximum amount every year, it's crucial. Notice the words I'm using, the words that's bolded, crucial. Do you invest enough? The invest isn't important. Advisors take all this time to try and stress words like invest, like are you investing the right amount? No. Invest enough. That's an emotional word. To take advantage of your employer's full company match. Not doing so, I love this one. You ready? Not doing so is like giving away free money. So type in the chat box and give me a subject line heading for that. Come on, this somebody's got to do this. This has got to be easy. It can't just be me. That's really, really easy, right? Not doing so is like giving away free money. Type in the chat box and tell me a subject line on that. You can come up with one. I'm going to give you one here. I'm going to give you a great one. And I've already used the word. Stop giving away free money and put it in your pocket. That's a great subject line. Because that's exactly what they're doing. If they don't take full advantage of their company's match, they're giving away free money, aren't they? Examine other saving vehicles. Contributing towards your 401k is not the only tool you should be using to plan for your retirement. And look at the last part about this. You will never pay taxes on that money ever again. See, I would never get in a debate with someone about whether they should or shouldn't have a Roth IRA. And truthfully, until you do a full financial evaluation of their situation, we really shouldn't be making any blanket statements to them about what's good or not good. But I can tell you a true statement is if they consider placing money in a Roth IRA, while they won't get the tax deduction, they will never pay taxes on that money ever again. See how I said that? Notice the voice emphasis I used on that? And what's great about doing this in our marketing is when we talk to people, we want to make sure that our words are congruent with the messaging that they're receiving from us. That's how we build trust. And in fact, the Roth IRA is a nice complement to a pre-taxed 401k. See how I tied that back in there? It's a nice complement. Here's another messaging. I'm not going to read the whole thing to you. But again, go to the bolded words. What words have I bolded that can influence, that draws attention, that strikes the emotion, that relate to the experience people naturally go through? Navigate, weather, and unanticipated life events. You know, the great thing about the news and the government, as we saw today and yesterday in the news when we were talking about inflation, is they tell us, last week they came out with the inflation rate. This week they came out with wholesale inflation. Well, last month, wholesale inflation was 7.9%. Wholesale inflation now, this month, I think was 8.5%. I would take my email template that I already sent out last month about the 7.9% wholesale inflation, and I would repeat it and bold my words more and put an X over the 7.9% and insert the 8.5 in big reds and ask the question, did that affect your savings, your spending, and your accounts more than you wanted or more than you expected?